Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Right now, guys, we will take a look at the Canadian dollar. In fact, currently we are tracking the three major currency pairs that have created recently some interesting setups. Yesterday we have discussed the Great British Pound. Right now we are watching on a Canadian dollar. Also, we keep in mind the euro currency. Currently, guys, the most markets are driven by yesterday's FOMC minutes of June meeting, and market was slightly disappointed yesterday because it hasn't seen and hasn't got the hints and prompts on possible rate hiking, or at least some hawkish policy that could be applied in the nearest future. All that market participants could find in a minute statement is that the quantitative easing program probably will be finished as it was planned in October, and also there was some discussion concerning this really money, about the $2 trillion that Fed has inflowed in the US economy and how it will be sterilized and so on, but no hints, no prompts on possible rate hiking or applying some hawkish tools on the market. That was slightly disappointing moment for the market. It's not what was really significant, but because the major meeting will be ahead, particularly speaking the July meeting. Because on July meeting, Fed will have to talk about the recent non-farm payrolls data. It will have to talk about the producer price index, retail sales data, the consumer spending, consumer expenditures that we will get on the next week. They will have to talk about it. And currently the major all analysis tell, today I just have read some comments on the recent meeting, on the recent data, that all analysis tell that we in fact sit in a wagon and Fed stands ahead and pull it, because in fact all situation right now depends on Fed and all eyes will be on Fed. We expect, how some analysts tell, that Fed should apply and should react on recent positive data that we got in the United States economy. But anyway, everything will depend on Fed, and that will be the speech on the meeting in the Jackson Hole. That will be meeting in the on the Federal Reserve on the at the end of the July. So it's probably Fed should clarify something. That's why yesterday reaction was mostly as negative, slightly negative for the US dollar. So you could see it on the euro currency, you could see it on some jumps on other currency pairs, and then in year's future, maybe in the coming of couple of weeks, US dollar could continue to show some slight decreasing, some right before the major events will happen, when some positive news could be announced for the US dollar. Till that moment, US dollar could show maybe some slight weakness. Not necessary, but this very often happens. Because right from yesterday till the end of the July, to the 30th of the July, when the Fed meeting will happen, we in fact do not have any significant numbers. Even if inflation numbers will be significant, the impact also could be really limited, because you could just recall what has happened when the just outstanding data on the new non-farm payrolls numbers were released This was really very good numbers, but reaction was limited because currently just the numbers are not sufficient for really significant action on the markets. Also needed the Fed reaction, because Fed is driving the rates, not the pure numbers. That's why even the great data on inflation hardly will push markets significantly. Now let's turn back to the technical analysis. On the Canadian dollar, we have discussed the possibility of the pairing Jordan-Apley directional patterns. Here we have excellent thrust down. We said that it will be great if market will form, for example, Brent bottom sell. For that purpose, market was needed to continue move higher, hit the major resistance area within the 3 closes above the this green line. That's 3x3 moving average. But that hasn't happened. So market has made an attempt to move high here, but failed, return right back down. Hence, as we didn't get the Brent bottom, second chance, second pattern that could be formed here is the double repo Y. Double repo is the short-term reversal pattern in comparison to the Brent bottom. Brent bottom is the continuation pattern, because Brent bottom is just retracement, and that has the significant probability of the downward continuation due to the previous momentum. That's the core, that's the idea of the Brent bottom. But when the market forms the double repo, it shows the short-term capitulation of the bear, some exhausting of the bear's power to the downside right now, and it leads to short-term upward reversal, and it could lead to a deeper retracement than the Brent bottom could reach. Usually the target of the double repo is the 50% resistance of the previous thrust down. So that could be approximately 1078 probably, somewhere in this area. Okay, right now we have only the half part of the double repo in place, so we have thrust close above the 3x3. Here we do not have the close below yet, so I hope that it will happen today, tomorrow. Preferably if market will form the deeper second bottom, and confirmation bar of the pattern will be when the market will form another candle with the close above the 3x3 again. Close above, close below, close above. In this case, in this moment, the double repo pattern will be confirmed and will stand in place and will be suitable for trading. That's what we will be monitor on the daily chart of the Canadian dollar. Because thrust down is excellent, this really significant support, it's weekly agreement, and usually markets react on such sort of the supports. It really could happen that market will show this reaction. That's why we will keep an eye on the possible double repo in the Canadian dollar. On the 4-hour time frame chart, the target that market could reach with this pattern stands around monthly pivot point and has been tested yet. So you can see this is really a significant resistance cluster. We have talked about it, 175, 1075, 1079. That also includes the untouched monthly pivot point of July. So that's most probable minimum target. So market, if it will form the double repo and if it will start to work, that's the target that market should at least to reach. Maybe we could get deep reaction, but that's at least target. Let's call it in such a manner. On the hourly chart, here guys, the pattern that we have discussed previously, the double bottom. You can see here first bottom, second. We said this pattern will be treated as the valid if market will hold above the neckline. As you can see, yesterday market has failed here and returns right back down. Here in fact was the first bell that probably the double bottom could fail, because that's not typical for the double bottom when the market really shows the deep retracement inside of the body of this pattern. And here market has failed, double bottom has failed, and this means that with the high probability market should reach the bottom again. So market fails this pattern. It's very probable and very often happens when the market returns right back down to the extreme points of the double bottom. But currently it still looks like there's such sort of the wide channel to the upside. Well, So if market will break to this support area, that will be the first sign of the possible action right to the bottom. But for us guys, major object is not to trade short on the Canadian dollar with this some unclear setups, very wide and volatile action. Our task here is to wait for the appearing of the clear pattern and trade it. That's our major object. And let's keep an eye on it, because this is really a nice pattern and could give us, it has nice chances to success, especially when it appears on the significant supports. So currently we need nothing, just patience. And let's hope that we will get this nicely looking setup on the daily chart of the Canadian dollar.